Hi, everybody. Mike Lee here, Palantir fanboy. Just want to talk about my favorite stock, taking it in the teeth due to a research report from Citron Research. So I like this guy, Andrew Left. I think he does good work. I just think he's just way off base with Palantir. I think look, it's very easy to make a case the stock is overvalued. But the case that he's making is just not comparable. We can, the first thing they compared it to was OpenAI. OpenAI is an LLM. It's a leader in large language models, but it's just an LLM. It's a commodity. Palantir is the most unique software ever created in its ability to talk to so many different systems in such a short period of time. And the revenue opportunity it has in front of them, the addressable market, they say it's somewhere between 120 to 160 billion by 2030. It's more like, a trillion to a trillion and a half. And they only need to get like a 4 to 6% market share down from 7 or 8 for what they do right now to justify this valuation with substantial upside to the top. So, I'll share a couple things through here. You look through here, you look at their annual revenue. I think this number for Palantir over the next year is closer to 7. The trailing 12-month revenue growth is 50%. They're expecting it to decelerate. I expect that to decelerate. And then just somebody else made this. So here's Citron Research client right here. So number of clients, 15,000, 3.9 billion in revenue. Look at Palantir's number of clients, 849, 4.15. You know, it's um, it's it's not really a comparable. Like, why do they need so many customers to generate less revenue versus Palantir? Could it be that Palantir has much more opportunity? It's not even really close. And like you start looking at Palantir and you're looking at this revenue, so pretty substantial from the second quarter to the third quarter growth last year, and from the third quarter to the fourth quarter, second quarter to third quarter. So we're looking at the trailing couple of years of revenue growth, and then we're at 1.4 billion in this last quarter. And again, the estimates for next quarter is a material deceleration of quarter over quarter revenue growth. I think this is you can almost set your hat to double digit quarter over quarter revenue growth. Again, here the estimates they're just not that aggressive, right? It's like mid to high single digits for revenue growth going forward. I don't see that as realistic for Palantir. Like, you're growing at a 50% clip here. Like, why is that going to decelerate? Right. So you look at this quarter three number from this year to next year, you're looking at material deceleration as AI ramps up. So, I guess Databricks is a better comparable than OpenAI, but that like it's like a new one, right? So the first thing they came out with their short call, for anybody who doesn't know, Citron Research, what they do is they publish reports where they think there's fraud or something else. And they show their work and they short the stock to bet against it. And so, I saw some reports from them talking about NVIDIA and shorting NVIDIA in 2016. It's up 100x since then. So these guys aren't always right. Although, again, there's a lot of people giving them a lot of hate online because they love Palantir and it is a cult-like stock. And I am 100% part of that cult. But these guys, like, it just doesn't mean they're wrong. Like, they simply, to the first comparison to OpenAI, and I think now they're out there talking about Databricks, because Databricks does some of the things that Palantir does, but get, they'll never get anything close. So like Palantir could take out the entire ERP market, which is a $100 billion a year market, and that's not the enterprise resource planning. It's not including how much software is going to be needed. So Palantir is the glue that's going to tie your LLM to your organization, the data back and forth, and all this organization together through their ontology. And like when we get to the era of AI agents and applications, Palantir is going to be implementing those in the business units. So um, this, I don't know if I'd say the sky is the limit for Palantir. It is super expensive. I would imagine revenue next year closer to 6 or 7 billion, which means here let's look at let's go back to my screen, um, and you look at where they are in a market cap right now. So 350. Um, so yeah, you're trading at 50 times forward sales, roughly, maybe 60. I think 40 is a good number for a company like this that's growing like this. But you start looking out 2 or 3 years, if you maintain these growth rates, which in my mind, I need to see like 12 to 15% quarter over quarter revenue growth on like a rolling 2 or 3 quarter average. So if they have one quarter where they don't grow that much, then the next quarter they have a huge quarter to make up for that. That kind of justifies the valuation very easily to where you get to like a $40 billion revenue number in 2020, 2030, and we'll be trading on that in 2029. So, 3 years and change from now where we'll be looking at that valuation, and then it starts to make sense if you grow stocks like this grow into their valuations. But look, I'm looking at buying some. I'm just going to bring up one chart that somebody sent me earlier today, um, and I'm gonna share this guy. Um, you're at a pretty good weekly. Like this is the weekly resistance for Palantir in the low 150s, and I think we got to bounce off that. And said from when he sent it to me, um, and then I'm just going to go back to one other one from like this legendary technician named Wolf Deemer, who I follow, and you should follow. Let me see if I can find him. He put up a great one last night about Palantir filling its gap. So I'll just bring that guy up here again, and you can see it. So see this little gap right here. That's where Palantir. So you can see it bouncing off, and like I think we bounced off it earlier today. Just get to a bigger chart. See, so you're down here, you're bouncing off it, and we're going to get a close above that gap, and kind of you filled all that damage in. Look, we could get some more bad news, and the nature of the market is very momentum driven. So if you have some sellers, some aggressive sellers in a low volume market, you can really push your stock down. And once you start getting it, pushing it down, the computers are going to just push it in whatever direction. It works on the way up. It's less volatile on the way up because no one panics when a stock goes higher. When a stock goes down, it's always more volatile because people don't like to see things go down. So could we get another leg lower? Maybe. If we do, I'm a buyer. I think this is the $300 to $400 stock, 2027, 2028. Maybe there's other things that are better returns, but like this is there's never been a company like it. There never will be another company like it. That's me. I'm Mike Lee. Full disclosure, Palantir fanboy. Own this for my own a bunch of this for my clients. Wish I bought a bunch for my personal portfolio. But look, I'm worried about conflicts of interest and that other sort of nonsense and getting in trouble with the regulator, which I don't know that I should be, but I am. So that's why I missed out on this, and I'm an idiot for doing it. But anyway, hopefully this helps put some color on the situation. Cheers.